Welcome back to the show. We're right in the thick of tax season, and it can be a stressful time for many of us.
That's right, but it can also be an opportunity to make the most of your deductions or reevaluate your financial plans. And here with us to talk about some tax tips, Centennial Wealth Financial Advisor Jack Klunder is here. Hi, Jack. Welcome back.
Hey, thanks for having us. It's awesome.
Yeah, good to have you with us. So lots of tax questions this time of year. I mean, you've got the pop-up stores and some of your big box stores, or we know those accountants are especially busy. Are you guys busy as well? What are some of the big questions you get right now?
Yeah, so we're pretty unique, I think, in that we actually have an enrolled agent with the IRS that works on staff with us. So yeah, definitely a busy time because we're in that season of doing all those tax returns. But I think one of the things that has been also really helpful is the forward-looking tax planning. So, I think if you're sitting out there wondering, hey, what should I do? You're sitting down with your tax accountant and preparing last year's rear view numbers. Just ask them, is there anything that would help me before we file these taxes? Are there any prior year contributions to, an account that might defer some more income, or an HSA account? You look for those opportunities in the review, but then also use the opportunity, hey, let's look forward. Is there anything, this year that we might want to consider for tax planning?
And what are some of those biggest questions you get asked by people? Because I've wanted to get help with my taxes for a long time, but I feel like I'm not anywhere near maximizing my allotted deductions. When it starts throwing all those questions at me, I'm just like, I don't know. just get me through this. My brain's already overwhelmed.
Yeah, I think a lot of it is, am I paying too much in taxes? That's the big question.
Yeah.
And am I missing any tax opportunities? And so, to speak on both of those, with the Tax Cuts and Jobs Act of 2017 that is set to expire this year. This is the last year of that. That standard deduction went so high that a lot of people could just take the standard deduction. And so whether it's $15,000 or even $30,000 for a married couple, that wiped out a lot of those individualized questions of what can I deduct. It made it a pretty broad stroke for, being able to get just and choose the standard deduction. I think where people might be missing some of the opportunities is through what's called tax bracket optimization. And so let's say that a married couple is making $100,000 of total income. Well, they might still have about $24,000 to $26,000 left in the 12% tax bracket. And so that's where the tax planning and looking forward really can help you, because it might be, well, we could start saving in our Roth 401k, Roth 403b, or we could start doing what's called a Roth conversion as they prepare for retirement.
Gotcha.
So they can start getting some tax diversification. So what makes our job big, I know this sounds like big words, but it's basically you don't want all of your money, if possible, to be in an account that Uncle Sam is also a part of. So if you can start some tax diversification and optimize whatever bracket you might be in and have some of that longer term planning, it makes retiring really easy because you have different accounts to pull your money from. That's
just a kind of a quick follow-up question on that. Why is this all so complicated? They want us to file our taxes. You would imagine they wouldn't make it so that you need to be a professional, dedicated all your time to even understand this process.
Yeah.
This seems overly complicated sometimes.
Well, and I think with things that you don't do every day, it does. It can get super intimidating. I'm sure there's so many people in the audience, if they had to come sit here and do what you guys do every day, they would have a panic attack, right? And you're just like, hey, this is what I do and this is how I do it. So when it comes to learning something new, I would just highly suggest find somebody that you trust, that wants to have the heart of a teacher, because at the end of the day, it can be distilled down into something that you can absolutely understand.
Gotcha.
A whiteboard, a little bit of understanding of it, and then passing that on. I've seen people have the most peace when it comes to taxes, when they know what to expect when their return happens, and also they know what they're doing going forward. Why are we doing and making these decisions? Well, this is our end goal, okay? It's going to be to retire and stay retired. Yeah. And especially if they want to retire before age 65, now is the time to just sit down with somebody that they can trust to get that planning in place. So there's peace. There's peace when they can understand it. And You would a whiteboard, you'd be fine.
Gotcha.
You get it
Gotcha.
figured out.
Sounds like, oof. My brain just completely went.
Yeah.
All right, so we've got the taxes you pay, the deductions, but
Yep.
I also know from our text email chat last
Yeah.
week, one of your favorite topics is the qualified charitable distributions.
Yes.
But those only apply to certain people of a certain age?
Yeah. So,
how does that work?
Yep. Thanks for asking. That's awesome. So as soon as you turn 70 and a half, if you're supporting any kind of charity, you can actually send your traditional IRA money that you've never paid tax on it. You can send that through a QCD, qualified charitable distribution, to the charity of your choice. Now, why would we do that? Well, you're gifting money that's never been taxed. And so what happens is when people might be using their checking account to, tithe or to send in their donations to these charities, they're using after-tax dollars. Okay, so they had to pay the taxes, get the money, and then they support the charities. Well, at 70 and a half, it's a nice little number to know. Once you get that age, you can have it sent directly from your traditional IRA, that account that has you and Uncle Sam in it, bypass Uncle Sam, and give it right to the charity without it becoming a taxable event to you. So it's a beautiful way to give.
Why do they limit that to just people over 75? I mean, charities are in need of assistance all over the country. It seems like they would kind of be exempt from the whole, hey, you're keeping people from donating to us by taxing them.
Yeah.
So is there a way they can just donate and not be taxed as opposed to having to save all this documentation for tax season and then tell Uncle Sam, hey, that thing you taxed that you know fully about, here's more information on it?
Yeah.
Well,
there are some other options. The age 70 and a half rule for your IRA is great. One more note on that, and then I can give you a better answer on the other options. But I have to shout out, my dad turned 73 today. Happy birthday, Dad. Love ya. Okay. So this is the year that he'll have to take an RMD from his IRA, so required minimum distribution. So what he'll do is he'll take he'll do a QCD that will satisfy his RMD. And so if you have these required minimum distributions, I know it sounds like a lot, but it's gonna satisfy the RMD so Uncle Sam's not upset, and it'll be an awesome way to give. But to your question earlier, there's people that might get an influx of money that they want to give away, and they might not quite have the mission that they want or the charity in mind. And so then I might suggest like a donor advised fund. This is an account that you can set up where you can give that tithe, you can give that the money devoted to the charity, and it can sit in this account until you find the charity that you want to give. But it becomes that taxable event. Rather, that tax planning strategy is if you have money before the mission, there's a place you can put. And then once that mission arises where you're like, yep, I'd love to support that mission, then you can send the distributions right from that account.
10-4.
Yeah, it's a really nice, easy way to give.
Yeah.
Man, well, thanks for all the acronyms.
This is why you need people like Jack in your corner because, man.
You lost me 4 or 5 times in that conversation.
Trying to keep up, Jack, but man, that's a lot.
All right, Centennial Wealth, you guys have a couple different locations around northern Michigan. Where do we find you for more?
Yep, so we have Traverse City, Petoskey, Gaylord, and Cadillac.
Excellent. Sendwealth.com, right?
Yep, send-wealth.com.
Awesome. Jack, thanks for coming in.
Thanks for having me.
Pleasure, Jack.
Good to see you.